You returned to China, so is the Summer Davos after a 3-year absence. Madam Director General, how do you expect this Summer Davos to deliver for global economy in galvanizing consensus and action for the world economy?
Well, I think it's really critical that this is taking place in China. As you know, China is the second largest economy in the world, a driver of global growth. So having a gathering like this with key business people, key policymakers and politicians at a time of heightened global tension, I think is a very good thing, because we can all listen to what China is trying to do. One, for its economy to recover and keep driving the global growth, keep contributing. Two, how is China feeling about these tensions and how can we cooperate better globally? Because we cannot solve the world's problems unless the two big economies, the two big powers get along.
Exactly. How do you see the role of China in this post-pandemic world, especially in terms of helping with global trade and global growth? And in particularly, how do you see China's role within this multilateral trading system?
Well, China is probably one of the poster children for the success of the multilateral trading system. Since it joined the World Trade Organization in 2001, China has done phenomenally well. Its per capita income has increased over 12 times. It's now the largest exporter in the world, is the second largest importer. So on all counts, China has done extremely well. And as everyone says, it's critical to the world economy. So what happens to China is of consequence not only to people in China, but to everyone around the world. Almost all the economic institutions have revised up their estimates for Chinese growth this year to 5.2 for the IMF, 5.6 for the World Bank. And we're hoping that that recovery that we're seeing will also help drive recovery in trade. Trade helps to feed into global growth, and global growth helps to feed into trade. So we hope that the prospects will continue to improve.
You mentioned the projections from the IMF as well as the World Bank of over 5% of growth for China going forward. Is that also the consensus estimate projection from the WTO from you?
We look at the numbers last year, and trade between China and some of its biggest trading partners, the numbers still look robust. The trade with the US at $690 billion is close even past the peak that we saw just before the pandemic. With the EU over $818 billion in trade, you see the numbers are really large and substantial. However, what we are detecting this year is some changes in the patterns of trade. And that is why we are concerned about the talk of decoupling, because the numbers that I just talked to you just now are based on previous investment patterns. Now, if we begin to see investment patterns changing in certain sectors and those investments going away from China, then that might drive changes in the trade numbers. So this is a little bit of concern to us, but we know in certain areas that investment patterns are shifting, and companies seem to be diversifying and moving to other areas. So it is just the beginning of the data. We don't know if it's a blimp or if it's going to continue, but we are beginning to see changes. So let's wait and see what happens with Chinese trade by the end of this year.